When it comes to long-term care, many people have heard of it or even experienced with a loved one or a parent. Today, we're going to simplify what long-term care coverage is, how it works, and the options available to you so that you can make an informed decision for you and your family. So let's go to the board and look at three main options that you have for long-term care coverage. Okay? All right. Number one, this is what we call a traditional long-term care. Okay? Think of this as your home or auto insurance. You're going to pay a premium, and if you don't ever use it, you've just paid that premium and you never get any benefit other than the coverage. So what this looks like is we're going to pay that premium for the long term. Okay, when we look at all of these options, we want to look at many different factors. Is it going to have a cash value, something that you can take back with you? Does it have a death benefit? If you never use it, do you get any benefit out of it? And then, of course, does it cover long-term care? Okay, so with the traditional based long-term care coverage, there is no cash value. Okay, and unless you pay for a return of premium rider or something similar to that, there is no death benefit. Okay, and of course, this is in place because it does have the long-term care coverage. Okay, so but from a long-term care perspective, to be able to use it, you have to have the inability to not complete 2 of 6 activities of daily living. Some of those include things like bathing, toileting, eating, dressing. And so if you're certified by a doctor that you can't complete 2 of those, then typically the coverage will pay out based on your policy. And these traditionals, they typically pay out per day. Okay, so think of something like $150, $200 per day in coverage, and that's how the premium is set. Okay, this is really kind of old school. There's a lot of other policies out there that might be better suited for some people nowadays. So let's look at a couple other options. Okay, option 2 is what we call a hybrid policy. Okay, similar to traditional, you can pay this over time, or we can pay a lump sum in and never have to pay again. Okay, so a great thing with this is it comes with a cash value. Okay, so we're going to be building cash value, and a lot of times that might look better because we know we're putting money into something. And if we never use the long-term care benefit that, of course, these have, then at least we can see that there's a value there. Well, the other part of this is sometimes we might put in 50, 100,000 into these types of policies, but you never pay again. Sometimes we're just going to pay that ongoing premium or a combination thereof. And so depending on your situation, this can really work. Okay, so think of if you've got CDs at a bank or something of that nature that aren't really doing anything, we just reposition those into something like that to get this coverage. The great thing with a hybrid policy, if we never use it, there is a death benefit with that. So unlike a traditional base where we're going to just pay for it, and if we never use it, we lose it, there's always something here that can go back down. So this is a great example of a type of policy where we can position some money and get the coverages that we need, but then still pass that down to the next generation, our spouse, whoever that may be. All right, so the third type, this is a life policy with a long-term care rider, okay? So typically what we're looking at here is we've already have a need to purchase life insurance for some other reason. Think of estate planning or something similar to that. So what we want to look at is if we can add a long-term care rider on it, well, obviously we're going to get our long-term care coverage from that. But all this is we're going to accelerate that death benefit tax-free in most situations for long-term care. Again, can't complete 2 of 6 activities of daily living. And so what we get with the life insurance policy is a lot of times we get a cash value. Most of the time when we're setting them up for estate planning, things like that, we're going to see cash value. And of course, the number one reason we're doing this originally to get the life insurance is the death benefit. And so what we look at here is the same thing. We can pay for this over time. A lot of times we'll do pays over a short period, 3, 5, 7, 10 years. And then also we can do lump sums into these to cover that, all dependent on your needs. But the most important thing is that we're covering different aspects. We're using $1 to tackle many different things. Okay, so that's a really important thing with these types. And I know I said there's 3, but really you can't purchase it, so to speak. But the 4th type is self-insured. Okay, so if you're sitting on a big pile of money and you think that, you can cover $10,000, $15,000 a month of nursing home benefits, assisting living, home health care, anything like that, self-insurance is there. But what we typically say to a lot of people is if we can get coverage from some other way and we can just shift money over and kind of change the risk of that, if we can get a death benefit, even if we don't use it, that money is going to flow back in. And so it's just shifting the priority of the risk over. And so while self-insurance works for some people, with these kind of newer concepts out there from the traditional based, we're really seeing that work out here. So from a statistics standpoint, a reason why we like to do this and educate our clients on long-term care is because essentially right now what it looks like is if you're 65, there is a 70% chance that you will need LTC at some point in your lifetime. So it's a growing number. Women tend to live a little bit longer and need long-term care longer. Men are a little bit shorter, about 2.5 years to women about 3.5. But overall, the average is about 3 years. So having something that can cover that, and again, national averages are way over $10,000 a month to cover long-term care. So these are just important factors to think about when we look at, does this make sense for you and your financial plan? Coming soon, we're going to go through a client example of how these type of policies can benefit a financial plan. Thanks for watching. We'll see you next time.